Anil sir, we can't hear you.
Am I audible?
Yeah.
Yes, sir.
Very good evening to all of you. On behalf of Institute of Chartered Accountant of India, I welcome you all in today's 104th CP program organized by AASB of ICI for this council year. As we all are aware that today's topic is very important and very relevant, that is the prospective financial information and compilation engagements. And in order to tackle these two very important standards, we are having with us two eminent and learned speakers, CA Sarika Gusenji and CA Harshvardhan Doshaji. So on behalf of AASB of ICI, I extend my heartiest welcome to both the learned speakers, Sarika ma'am and Harshvardhan. Welcome to you, ma'am. Welcome to you, sir.
Thank you.
We are having with us two chartered accountants as a moderator, CA Priyamvada Mukherjee ji and CA Bhavuk Babeja ji. So on behalf of Auditing and Assurance Standard Board, I extend my warm welcome to both the moderators for today's webinar. Bhavuk ji, welcome to you. Priyamvada ma'am, welcome to you.
Thank you, sir.
So, Honorable Chairman and Honorable Vice Chairman, sir, both are stuck up in another meeting. So, I'm taking this liberty to start today's webinar. So, straightforward, I am requesting first moderator of today's webinar, Madam Priyamvada Mukherjee ji, to please start the proceedings of the webinar. Over to you, Ma'am Priyamvada ji.
Thank you so much, sir. Firstly, I'd like to express my sincere gratitude for giving me this opportunity of being a moderator at today's very important session, like you mentioned. This session is going to cover two very crucial standards, SAE 3400 and SRS 4410, which is examination of prospective financial information and compilation engagements. Understanding this standard is very crucial for ensuring credibility and quality of our financial information, which is further used for decision-making purposes. So, to give a brief introduction, prospective financial information is information which is based on assumptions about what might happen in the future and possible actions taken by an entity. It is very subjective in nature and requires a lot of judgment in its preparation, which is why we need professional guidance for the same. Coming to compilation engagements, it is basically not like an assurance engagement where an auditor has to give a comment upon the accuracy and completeness of information, but here they are going to assist the company in preparation and presentation of their financial information. This basically helps a company by gaining the expertise of a professional in the field of accounting and financial reporting, and also in dealing with ethical requirements and compliance with professional standards. So on this topic, we have with us very two learned speakers, CA Sarika Gusain ma'am and CA Harshvardhan sir. So it is my proud privilege to give you a brief introduction of CA Sarika Gusain ma'am. Just one second. So CA Sarika ma'am is a CA and CS and also holds a diploma in IFRS from ACCA UK and BRSR from ICAI. She has around 22 years of post-qualification experience. She is currently heading the technical function of Mazars in India and is also leading the firm's ESG and sustainability practice. Her current responsibilities include technical research, advisory, L&D initiatives, and ESG projects of the firm. Her past experience includes servicing large clients in the area of audit, accounting, and advisory. On a professional front, she has co-authored 2 books and also speaks on a couple of forums. She also keeps taking up a couple of educational projects with ICI and is a member of a couple of committee of ESG. I would now request my co-moderator CA Bhavuk to introduce our second speaker for the day.
Good afternoon, everyone. Thanks, sir, and thanks to ICI for providing this platform to act as a moderator. I'm really obliged for that. And so, as CA Premadaji mentioned, that our today's topics are SA 3400 and SRS 4410. So basically, SA 3400 talks about on examination, the examination procedures for historical information. That is based on the best estimates and hypothetical assumptions. And SRS 4410 talks about, compiling the financial information, but without providing an assurance. So I would now like to give a brief introduction about CA Harshvardhan sir. Thanks, sir, for joining us today. And he's a chartered accountant and a commerce graduate from University of Mumbai with specialization into accounting and finance. And he holds 8 years of experience in auditing field as well. He has been associated with CNK and Associates LLP since the time of his articleship. And he specializes in audits of service industries and foreign multinationals and he has handled various large private limited clients as well for their statutory audits, and he has dealt with audit of listed companies as well. Apart from this, he has experience in valuations and due diligence assignments as well. And in the past, he has given various seminars and training on company audits, standards of audit, and certification assignments at ICA level as well. And he has been part of internal team to develop working papers and audit documentations. And in past, he has delivered lectures to CA final students as well to give them guidance on how to prepare. So now I would like to request CA Sarika ma'am to start with the deliberation on the first topic for today. Over to you, Sarika ma'am.
Thank you so much. And I would like to extend my heartiest thanks to the Institute of Chartered Accountants of India and Sir, of course, for inviting me over again. It always feels home when I speak on accounting and auditing matter, because these days I am all like neck dipped in ESG projects and doing sustainability, etc., etc. So, and therefore I keep taking these projects in between, because as I mentioned, it always feels like you're coming back to your place, you're coming back to your roots, and you keep that momentum on for accounting and auditing spirit. And I would like to extend my thanks to the young moderators for explaining the topics for today for myself and my colleague speaker, as well as giving a brief introduction about both of us. Thank you so much. So without delay, let's start with today's session, the first session, which is about prospective financial statements and audit thereof. Am I audible properly? And I'm seen as well?
Yes, ma'am.
Yes,
audible.
Yeah. Okay. So I would just share my screen and let me know if it is visible, and then we'll start the deliberation. I'm just turning my PPT mode on. Let me know if it is visible in the full screen. Is it visible in the full screen?
Not yet, ma'am.
Not yet.
Now?
No, ma'am. Slideshow से करें हाँ
Yeah, now
अभी ठीक है fine.
So as the name suggests, for this auditing standard, which is examination of prospective financial information, so this seems very easy, auditing the prospective financial statements. कुछ आपके projections होंगे, कुछ numbers होंगे, where we will just apply the percentage what is company is applying in past. कंपनी का ट्रेंड देख के उसका सेल्स बढ़ा देंगे, उसका प्रॉफिट बढ़ा देंगे. It seems so easy, but it is not, because when it comes to verification by the auditors, the onus rests on the auditors for all the assumptions, projections, and the data what has been collated by the management for a specific purpose, because it might be for the internal consumption as well, and to be submitted to the external stakeholders also. For example, if any company is submitting its collated financial information to the bankers or to the investors, or anything related to the future project, then anything which is contained within it becomes more important for the auditor to verify, because it is not based on a frozen historical data. So the volatility of the numbers and the assumptions is even more, and therefore the responsibility for the auditor is multifold now to provide an assurance to the stakeholders for which the chartered accountants are known. So let's start what we have all in the kitty. We will first understand a bit about the standard, then some definitions which are very, very crucial to understand the entire standard. Then we will understand the auditor's assurance regarding financial information. What is the objective of this standard? Then how to accept this engagement? What are the circumstances? What are the key factors which we have to keep in mind while accepting this engagement? Then what is the key to start the process is the knowledge of the business. We will understand. The period covered is something which is again very, very important aspect for these assignments. Examination procedures, how we have to carry out. Then presentation and disclosure, because no standard is completed without presentation and disclosure discussions. We will understand the documentation, because being an auditor, we would not overemphasize about the importance of documentation, which is a must. We will also understand how to issue the report. So, for example, you have done all the preparation for the examination, but you are not just sitting for the examination day. So, if we are not able to write the right report, then means the entire year's preparation for that examination goes for a toss. Then we will also understand what is the compatibility of this standard with the international replica of it, which is ISAE 3400. And last but not the least, we will understand about the model formats which we can use. So coming to the first part of it, introduction, this is standard. So I would like to stop here for a while. And again, I would like to, re-emphasize the importance of auditing standards. So when we were in the chartered accountancy course, when we started, I was from science background. For me, everything was new. So मैंने जो भी पढ़ा बहुत इंटरेस्ट के साथ पढ़ा. I was from Hindi medium also. For me, English was again something a battle to win. So whatever I used to read it afresh. So मेरे लिए बहुत आसान था to read and understand. But I can think of those students who have been like in the commerce for a while when they started the chartered accountancy. For them, initially it seems very easy कि आसान सा तो है. जो चीजें लिखी, it seems very easy. For example, this line only establishes standards and provide guidance on examining and reporting on the prospective financial information. But when we read the entire standard or all the standards together and we apply those on practical situation, in the live situation in our lives, then it is really difficult to segregate कि कौन सा standard apply होगा, कहाँ पे स्टैंडर्ड अप्लाई होगा, कौन से एग्जेम्पशंस हैं, कौन से डिस्क्लोजर्स हैं, व्हाट इज द बेस्ट प्रैक्टिस और हाउ टू अप्लाई दैट स्टैंडर्ड इन टोटलिटी अलोंगसाइड विद other standard. So when we go back to the specific standard, then we understand the utility of those very tiny lines or those words, that how important are they. For example, this standard establishes and provide the guidance on examining and reporting as well. So it is very important to break down every aspect of any standard. So जब हम लोग accounting standard पढ़ते, it's so technical that we pay attention to each and every aspect of it. But when we read the auditing standard, we lose the essence, we lose the concentration at times कि English ही तो लिखी है, simple ही तो लिखा है, appropriate evidence and timing, extent of audit procedures, documentation, presentation, etc. But it is very important to break down the auditing standards also to apply to the fullest, because as an auditor we cannot afford to miss any single guidance जहां पे आपको वो प्रिंसिपल्स को अंडरस्टैंड करना है, आपकी रिपोर्टिंग लैंग्वेज को अंडरस्टैंड करना है. बिकॉज इफ एनीथिंग इज नॉट वर्डेड वेल एज अ रिपोर्ट, it may be so damaging to ourselves being an auditor and to the company as well, because the entire report is the report card against the company in the public domain. So we have to be very cautious while we understand, or even more cautious while we understand or read the auditing standard, even against the accounting standard. So this standard, as I mentioned, provides the guidance on examining कि हम कैसे examine करेंगे and कैसे report करेंगे examine करने के बाद, and that too this very standard applies only for prospective financial information. This also applies to examination of prospective financial information, including best estimate and hypothetical assumptions. So what is the meaning of best estimate and what is the meaning of hypothetical assumptions? We will understand in a bit. Again, as I said, ये दो वर्ड्स पढ़ने में बहुत आसान लग रहे हैं, लेकिन दोनों का बहुत डिफरेंट मीनिंग है. दोनों की एप्लीकेबिलिटी रिलेटेड टू दिस standard is very different, and the points which are used to verify best estimate and the points used for verification of hypothetical assumptions are very different. And the report of the financial statements which carries these two information or either of these information gives a very, very different result. So therefore, it is very, very important to understand these two terminologies. Then we will also understand that where this standard does not apply. This standard does not apply where a very generic or narrative assumptions are given by the company or company's management. For example, in the director's report, we might want to read, or we see directors a statement where they give the projections that we will reach to the second position in next 5 years time, or our production will be 10 times than it was last year, etc., etc. So this standard is not applicable and should not be applied for those statements to be verified. And therefore, it is very important to understand the introduction, the coverage part. किस part of the financial information पे वो लगता है और कहाँ पे नहीं लगता है. Next is auditor should also use the principles which are used in other auditing standards. For example, fraud assessment, documentation, risk assessment, initial planning, etc., to the extent practicable. So in general parlance, अगर कोई आपका एक specific standard होता है, we have to apply that at first, and then whatever is not covered in that standard, or what is not contrary to my other normal standards, those normal standards are actually applicable to those scenarios as well. So this was about how to apply these standards. Then in an engagement to examine prospective financial information, the auditor has to obtain sufficient appropriate audit evidence for what? Confirming management assumptions are reasonable, that is best estimate, as I mentioned and I committed. I will just briefly explain what is best estimate and what is hypothetical information. We will just understand. Then we have to also verify the information which is prepared based on the assumptions provided by the management. We have to also ensure that all the material assumptions are clearly disclosed in that document. And last but not the least on the pages, we have to also check the consistency of these information with the historical financial information and accounting principles. So for example, अगर कोई particular piece of information आपका prospective financial information में use हो रहा है, लेकिन वो parallel है जो कि आपका historic financial information में भी आता है, आप you cannot miss to verify or make a linkage between the two. We have to be very, very cautious. अगर कोई common information है, that is also linked, verified, and corroborated. As I committed, let's understand very crucial and very important. Sorry, sir. Am I audible now?
Yes, Sarika.
Yes, ma'am.
Yeah, I'm so sorry for the technical glitch. So, as I mentioned, the forecast means a financial information which is based on management's current expectation for future events and actions, and this forecast collectively called as best estimate assumption. So that means based on management current expectation, we are depicting and we are forecasting the future events and actions. Projection, what does projection means? And a projection, how it is used is, projection is a very different terminology. So first of all, this is hypothetical. This is related to hypothetical assumptions. That means these assumptions are about future events and management decisions, like which are not guaranteed to happen. For example, if a company is starting a new project or it's a startup project, then whatever assumptions are made by the company. For example, that if I start, I do not have any past experience to share, but based on the current industry pattern or the experience of that person who has starting that project, can make some projections for future. So these are best case scenario. So these are hypothetical assumptions, and projections are based on hypothetical assumptions to or as against the forecast, which is based on some past experience, based on some past experiences of the company, but which relates to future. So any prospective future information may be a mix of forecast as well as a projection also. मतलब उसमें आपका management का current expectation which is more decisive, which is more predictable, उस पे भी based हो सकता है, and it may be partially related to something which is absolutely based on future, which is a projection. So these terminologies are very, very different, but both of these relates to the prospective financial information and therefore are to be understood well in detail and needs to be applied thoroughly. So what standard says that management is responsible for making all the assumptions and why to verify and have to affirm whether the assumptions or the forecast or the projections what are being made by the company are reliable, credible. And once that has been approved, the information carries more weight because that is being audited in a way. Now moving to the next section again. What is a prospective financial information? Again, we have to read between the line because that is a very, very important definition. It refers to estimates of the entity's future financial performance based on assumptions about potential future event and the entity's possible course of action. So, for example, as I mentioned, anything which is being prepared by the company, maybe an old company or like any new startup company, anything based on forecast or any hypothetical information that is being created as a package will form part of my financial information, and that is subject to my audit in this standard. So prospective financial information can be prepared for my internal consumption also and can be prepared for external dissemination as well. For example, अगर हम prospectus के लिए बनाना चाहे तो वहाँ पे हमारे बहुत साल के projections जाते हैं, sales के, revenue के, production के लिए. That might also be used for annual reports. For example, जो मैंने अभी बात की थी directors and shareholders के लिए, जहाँ पे directors make a very bold statement saying that the companies will double its operation in next 5 years time, or they will come with some plans, etc., etc. That can also be used to be submitted to the bankers or to the funding agencies as we discussed. So I just reiterate what we have understood so far. So we are studying or we are understanding an auditing standard which is not based on historical information, because that is prospective financial information. Prospective financial information, as I mentioned, it is based on future estimates, future assumptions, but based on some assumptions which are not having any substance. They would have some substance, they would have some trends and some points which can be audited based on some assessment or based on some adjustments, etc. So why these prospective financial informations are prepared? These may be prepared for internal consumption and they may be prepared for various external purposes, which you can see on the screen. So how the auditor will start assurance of these prospective financial information, this section briefly talks about that. So first of all, when auditor starts any audit assignment, he is very, very clear that it relates to future events and actions thereon may be uncertain. And therefore, while he is planning all of his audit procedures, those uncertainties are to be factored in while he is planning for that audit. The evidence which are supporting the assumption, since these are future oriented, so they may be speculative as well, unlike the historical data. So आज की डेट में तो आप मैनेजमेंट assumptions, मैनेजमेंट का जो पैटर्न चल रहा है उसके बेसिस पे आप वो assumptions बना रहे हो, but you never know, these are speculative because future is very very uncertain. जब कोविड आया, nobody knew कि जो प्रॉफिट मेकिंग कंपनीज थी उसका 1-2 साल में गोइंग कंसर्न का भी प्रॉब्लम आ जाएगा, उनकी फंडिंग की प्रॉब्लम्स आ जाएगी, उनके सपोर्ट लेटर वुड बी ऑन द रडार की वो एप्लीकेबल भी है नहीं. So future can be predicted, but there is always a scope of speculation therein. Auditors, in spite of the fact कि वो ऑडिट कर रहा है, वो सारी assumptions को वेरीफाई कर रहा है, वो सिस्टम्स चेक कर रहा है, बट स्टिल वो गारंटी नहीं कर सकता है कि जो रिजल्ट्स होंगे जिस तरह से वो प्रिडिक्टेड है वो फ्यूचर में भी उसी तरह से डिपिक्ट होंगे या ट्रू निकलेंगे. The complexity of the assumptions makes it difficult for the auditors that the financial information will be free from error. So जितनी complex information होगी उतना ही difficulty होगा ये बताने के लिए या ये assure करने के लिए कि वो free from error होगा. Therefore, the auditors can only provide a moderate assurance, and this is a very very important piece of this standard. So जैसे कि हम statutory audit करते हैं या limited review करते हैं या limited assurance करते हैं, so every type of assurance has definitive type of assurance reports which can be issued. So this is very very specific to this standard. पे हम रीजनेबल अश्योरेंस नहीं दे सकते, यहाँ पे हमें मॉडरेट लेवल ऑफ अश्योरेंस ही देना पड़ेगा दैट द असम्पशंस यूज्ड आर रीजनेबली यूज्ड इन द ऑडिट. अब now we are jumping to the next level. So we understood what is prospective financial information, what is the meaning of one type of assumption which is based on the current information, what is projection, जो internal जो आपकी प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन है वो आप इंटरनली भी यूज कर सकते हैं, वो डिफरेंट स्टेक होल्डर्स के लिए भी यूज हो सकते हैं. वी ऑल्सो अंडरस्टूड दैट हाउ एंड व्हाई इट इज कॉम्प्लेक्स फॉर द ऑडिटर्स टू कैरी आउट दिस काइंड ऑफ एश्योरेंस. अभी हमने जो प्रीवियस पेज पे पढ़ा, अब नाउ यू मेड अप योर माइंड दैट आई हैव टू स्टार्ट डूइंग दिस एंगेजमेंट, देन व्हाट टू डू नेक्स्ट. सो जब हम एक्सेप्ट करने जा रहे हैं तब हमें कौन कौन से पैरामीटर्स वी हैव टू सी. So first of all, the auditor should consider the following before accepting any engagement. First of all, who are the intended users? So सबसे पहले, whenever we are going to watch any show, we know the audience, right? If we are going for any presentation, we know our audience. So while we are issuing any report, we should know who are the intended users of the financial information. फिर उसके बाद हमें ये पता लगाने की जरूरत है कि वो जनरल पर्पस के लिए टू whomsoever it may concern, और वो लिमिटेड डिस्ट्रीब्यूशन के लिए, फॉर एग्जांपल बैंकर्स के लिए, लेंडर्स के लिए. देन वी ऑल्सो हैव टू अंडरस्टैंड दैट वो किस तरह की assumptions है. सो अभी हमने 2 तरह की assumptions पढ़ी, बेस्ट एस्टिमेट्स एंड हाइपोथेटिकल assumption. वो किस पर्पस के लिए या किस assumption पे बेस्ड है वो हमें समझने की जरूरत है, बिकॉज एज अगेंस्ट बेस्ट एस्टिमेट जो हाइपोथेटिकल assumptions है वहां पे जो हमारे नेचर ऑफ प्रोसीजर्स है वो और ज्यादा हो जाते हैं. Next is what are the elements to be included in the information. Next, what is the period covered by the information. So auditors is not debarred from rejecting or accepting the engagement if he believes that जो assumptions यूज हुए हैं या जो information यूज हुए हैं वो बहुत ही unrealistic है. For example, अगर कंपनी का current level 10% पे है and the company without having any orders in hand वो next year का projection 50% बोलता है या अगले 5 सालों में 70% hike प्रोजेक्ट करता है without any substance or past trend assurance, then obviously these assumptions are very much unrealistic and auditors can exit or reject the engagement as well. Now we accepted the engagement. The first thing comes is the knowledge of the business. Knowledge of the business is a very important key aspect in the beginning of the any audit assignment, but that becomes more important in case of prospective financial information because most of the things are based on industry knowledge, past pattern, future trends, peers, benchmarking, etc. So understanding business is a must. So auditor has to have a very good understanding about prospective financial information. And this includes, first of all, what are the internal controls which are used to prepare the financial information, कंपनी की डॉक्यूमेंटेशन की नेचर क्या है, किस एक्सटेंट तक कैसे मैथमेटिकल स्टैटिस्टिकल कंप्यूटर एडेड मेथडोलॉजीज हम यूज करते हैं, व्हाट आर द मेथड्स टू develop or to apply the assumptions, and what can be the accuracy of the financial information or what was the accuracy of the financial information which was prepared in past. और अगर आपको कोई डिविएशन दिखता है, सपोज आपका जो लास्ट ईयर का पैटर्न था वो 10% का हाइक था विच वाज रीजनेबल, और इस बार के प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन में उन्होंने 20% का हाइक दिखाया है, तो दैट इज वेरी वेरी डिफरेंट एंड वी हैव टू क्वेश्चन दैट. Auditor has to place reliance on historic financial information. Auditor have to assess the validity of relying on the past information. मतलब इस पूरी स्लाइड पे we have to see कि जो कंपनी historical financial information के बेसिस पे कोई भी future information बना रही है या उसका projection कर रही है, so they have to link it well. They have to review the historical financial information and then only he has to go back. So as I mentioned, अगर आपका trend 5%, 10% या 15% पे चल रहा है और now the prospective financial information says very hypothetical information, we have to stop there and question those information. Now if we come to period covered plays a very very important role. For example, अगर मैं कंपनी के पास जाती हूँ या एक कंपनी बैंकर के पास जाता है कि आप मुझे लोन दे दीजिए 10 साल का और ये रहे मेरे 10 साल के प्रोजेक्टेड फाइनेंशियल इंफॉर्मेशन, देन period cover, longer the period is, more competence we require to prepare those financial information because जैसे जैसे period बढ़ता जाता है जो assumptions है वो dilute होती जाती है. मुझे नहीं पता कि 5 साल के बाद कोई नई गवर्नमेंट पॉलिसी आ जाए, गवर्नमेंट चेंज हो जाए, कोई नई रेगुलेटरी पॉलिसी आ जाए, एंड इफ आई से हाइपोथेटिकली कुछ और तरह का पेंडेमिक हो which should not be there, so I can't really project. So shorter the period is, more reliability of the information is, longer the period is, less reliability of the projections is. So period covers a very very important role. So सबसे पहले अगर आपका पीरियड आपको कवर आप कोई भी फाइनेंशियल इंफॉर्मेशन पे काम कर रहे हैं, आपको अश्योर करना है, सो फर्स्ट ऑफ ऑल कंपनी का ऑपरेटिंग साइकिल जानना बहुत जरूरी है क्योंकि बहुत सारी चीजें कंपनी के ऑपरेटिंग साइकिल से चलते हैं. फॉर एग्जांपल अगर मैं रियल एस्टेट की बात करूं तो उसका ऑपरेटिंग साइकिल नॉर्मल प्रोडक्शन साइकिल से बहुत बड़ा है और उस पे बेस्ड अगर मेरी कोई भी फ्यूचर इंफॉर्मेशन में अगर प्रोजेक्ट कर रही हूँ, सो आई कैन थिंक ऑफ 3 years 4 years. बट अगर एक नॉर्मल ऑपरेटिंग साइकिल जो 6 months की है या 3 months की है और वहां पे मैं प्रोजेक्शन 4-5 साल के लिए बना रही हूँ, तो वहां पे जो हम असेसमेंट करेंगे वो बहुत डिफिकल्ट होगा. सिमिलरली जो कंपनीज लॉन्ग टर्म लीज में जैसे हमने बात की, तो वहां पे जो रिलायबिलिटी है वो आप लॉन्ग टर्म लेके चल सकते हैं, बट अगर कोई शॉर्टर पीरियड का हमारा प्रोडक्ट है तो उसका जो लॉन्गेटिविटी जितनी ज्यादा होगी, अजम्पशंस पे रिलाई करना उतना ही डिफिकल्ट होगा. फिर वो इंफॉर्मेशन यूज कौन कर रहा है. फॉर एग्जाम्पल अगर मैंने कोई इंफॉर्मेशन एक प्रोस्पेक्टस में दी है, तो वो जो मैंने फाइनेंशियल इंफॉर्मेशन बनाया है वो फाइनेंशियल इंफॉर्मेशन किस पीरियड के लिए बनाया है वो बहुत इंपॉर्टेंट होगा फॉर इन्वेस्टर्स टू नो कि जब वो एक्चुअल इवेंट हैपन होगी या अकर होगी, तो वो सारी चीजें जो कंपनी ने कमिट की है, विल दोज अकर इन दोज पीरियड और नॉट, वो दैट हैज टू कम आउट वेरी वेल फ्रॉम द प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन. So these three examples relate to that. The auditor has to focus on the reasonableness of the time. Length and uncertainty will be dependent upon the industry, nature of the business. And also we have to place some limit on speculation. We cannot agree to everything what client is saying कि 10% नहीं, अगले सालों में तो आप देखना कि यहाँ पे जो हाइक होगा वो 50% से ज्यादा होगा या नहीं. So far we understood, let's have a quick recap. We understood what is prospective information, what are reliable estimates, or what are hypothetical information, because जो चीजें मेरी रिलायबल एस्टिमेट्स है, करंट पीरियड को बिलोंग करती है, पास्ट पैटर्न पे बिलोंग करती है, उसके ऊपर फर्दर प्रोस्पेक्टिव इंफॉर्मेशन देना इज इजियर रादर देन जो मेरी एग्जैक्टली फ्यूचर इवेंट पे डिपेंड करती है, जस्ट लाइक अ स्टार्टअप कंपनी. प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन का डिफरेंट यूज हो सकता है, इंटरनल पर्पस के लिए भी, एक्सटर्नल पर्पस के लिए भी. जो डिग्री ऑफ रिलायंस ऑन अजम्पशंस है with respect to prospective financial information, that has to be more, because as against historical financial information बहुत सारी चीजें आपकी assumptions पे चलती है. So those assumptions have to be really realistic. So before accepting the engagement, the auditor has to have the knowledge of the business. Secondly, we understood that the purpose for which the financial information is being prepared and audited is to be understood. The audience of it is to be understood, and the period of it is to be understood. Then we have to, decide what kind of procedures we have to devise, and that's where we are. So सबसे पहले we will understand what are the factors वो जो हमें decide, जो हमें mind में रखने हैं कि जब हम अपना कोई procedure design कर रहे हैं. So as we mentioned that knowledge obtained during previous engagement by us or by our peers is very important. Management कितना competent है, अगर management competent है our work will be reduced. अगर management competent नहीं है तो हमारा काम बढ़ने वाला है. The likelihood of material misstatement. So for example, बहुत सारी चीजें होती है जो इंडस्ट्री से चलती है. So बहुत सारी इंडस्ट्रीज हैं which are fraud prone as against others. So we have to understand from the industry perspective, from the peers perspective, from the management perspective. अगर हमें पता है कि उस मैनेजमेंट के लिए कोई बैड न्यूज थी मार्केट में पहले, even if they have covered up everything, but the likelihood of material misstatement in those companies is more as against normal companies. Then we also have to understand that कि management judgment का कितना रोल है उन प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन को बनाने में. मतलब मैनेजमेंट जजमेंट चेंज होने की वजह से मेरी फाइनेंशियल इंफॉर्मेशन किस एंगल पे ट्विस्ट होगी, दैट नीड्स टू बी अंडरस्टूड. देन वेरी इंपॉर्टेंट कि सोर्स ऑफ इंफॉर्मेशन क्या है. जितना इंटरनल सोर्स होगा वो कम रिलायबल होगा, जितना बाहर का इंफॉर्मेशन होगा, कोई रिपोर्ट होगी, कोई स्टैटिस्टिक्स होगा, कोई गवर्नमेंट का डेटा होगा, वो ज्यादा रिलायबल होगा. थर्ड पार्टी डेटा. स्टेबिलिटी ऑफ एंटिटीज बिजनेस, वेरी इंपॉर्टेंट एस्पेक्ट एज आई मेंशन एंड आई कीप सेइंग. अगर आपका एक स्टेबल पैटर्न ऑफ ग्रोथ है, आपकी फ्यूचर प्रोजेक्शन उतनी आसान हो जाती है. लेकिन अगर कंपनी वॉलेटाइल है, सीजनल है, कभी 5% कभी 50%, उसके लिए प्रोजेक्शन निकालना बहुत मुश्किल होता है. लास्ट बट नॉट द लीस्ट ऑन द स्क्रीन इज, जिस टीम को आपने उस एंगेजमेंट पे लगाया है, उस टीम का एंगेजमेंट, उसका एक्सपीरियंस उस इंडस्ट्री का, उस बिजनेस का, या पुराने सालों में अगर उसी कंपनी का उन्होंने ऑडिट किया है तो वो बहुत मायने रखता है. सो सबसे पहले जो हमारे प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन है, ऑडिटर का जो फोकस होगा वो एक्सटर्नल कोलैबोरेशन पे होगा. मतलब हमें इंडस्ट्री से और एक्सटर्नल फैक्टर से हमें सोर्स करना पड़ेगा, बट हम लोग इंटरनल इंफॉर्मेशन को भी डिसरिगार्ड नहीं कर सकते. तो इट हैज टू बी अ वेल मिक्स ऑफ एक्सटर्नल इंफॉर्मेशन एज वेल एज इंटरनल इंफॉर्मेशन. सो जब हम हाइपोथेटिकल एग्जाम्पशंस की बात करते हैं, जो कि ज्यादा वॉलेटाइल है, ज्यादा स्पेक्यूलेटिव है, तब हमें सारे सिग्निफिकेंट इम्प्लीकेशंस को असेस करना है. वी हैव टू आल्सो इंश्योर द कंसिस्टेंसी फॉर द इंफॉर्मेशन की किस पर्पस के लिए बना रहे हैं, हमें आइडेंटिफाई करना है और रिजेक्ट भी करना है जो बहुत ही अनरियलिस्टिक अजम्पशन है. फॉर एग्जाम्पल, अगर कोई एस्केलेशन उन्होंने लगाया है विच सीम्स टू बी unrealistic, we have to write, then we have to reject it. अगर हम बात करते हैं मैनेजमेंट यूज ऑफ assumption की, सो वी हैव टू बी वेरी वेरी क्लियर दैट जो assumptions है वो प्रॉपरली प्रिपेयर्ड है, और वी हैव टू ऑब्टेन रिटन रिप्रेजेंटेशन फ्रॉम द मैनेजमेंट ऑल्सो for completeness, accuracy, and their responsibility for preparation of the future information. Now we are done with the examination, till examination. So हमने prospective financial information क्या होती है वो पढ़ा, कितनी तरह की होती है वो पढ़ा. We understood कि before we take up any engagement, what are the risk areas? We have to understand the business of the company. We have to understand the intended user of those information. We have to understand the period involved. We have to understand the assumptions, and we have to be very very careful कि वो किस तरह की information है, और we are not debarred from rejecting any information what is being used by the company. If it is realistic, it's fine. If not, we have all rights to reject those information. So अब आपने engagement ले लिया, आपने procedures कर लिए. Now what next? We have to understand, we have to affirm, is it the right and the appropriate presentation and disclosure? So recognition and measurement is done, which is fine, but presentation and disclosure together also plays very important part in any information, in any type of assurance engagement, and that's where our focus lies as well in this also. So सबसे पहले हमें ये देखना है कि अगर कोई स्टैट्यूटरी रिक्वायरमेंट है रिलेटेड टू दैट फ्यूचर इंफॉर्मेशन दैट नीड्स टू बी मेड, then we have to also consider the following aspect जब हम फाइनेंशियल इंफॉर्मेशन बना रहे हैं. सो हमें ओवरऑल बेसिस पे, मैक्रो लेवल बेसिस पे, बर्ड आई व्यू की तरह से हमें ये देखना है कि जो प्रेजेंटेशन ओवरऑल हमें दिख रही है, सपोज मैंने आज से लेके 5 साल का प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन के बेसिस पे मैंने 5 साल की सेल्स निकाली और आज 1 करोड़ है, वो 25 करोड़ दिख रही है, तो ओवरऑल बेसिस पे इंडस्ट्री पैटर्न देखते हुए, पीयर्स बेंचमार्किंग करते हुए, इंडस्ट्री ग्रोथ देखते हुए, डू यू थिंक 1 CR वर्सेस 25 CR इज रीजनेबल? इवन इफ कंपनी ने कोई भी प्रोजेक्शन दे दी हो, आपको सपोर्ट लेटर दे दिया हो, बहुत सारे कॉन्ट्रैक्ट दिखा दिए हो, तो आपको ओवरऑल आउटकम देखना है कि मेरी फाइनल प्रोडक्ट इज इट मिसलीडिंग. उन्होंने अकाउंटिंग पॉलिसी डिस्क्लोज किया है, नहीं किया है, और जो डिस्क्लोजर किए उन्होंने assumptions प्रॉपरली दिए हैं, नहीं दिए हैं, फिर डेट एज ऑफ विच the information is prepared is being disclosed or not, क्योंकि डेट बहुत इंपॉर्टेंट है इस पर्टिकुलर केस में. और अगर पिछले साल के कंपैरिजन में या हिस्टोरिकल फाइनेंशियल इंफॉर्मेशन के कंपैरिजन में अगर आपने कोई अकाउंटिंग पॉलिसी चेंज किया, सो एट टाइम्स व्हाट हैपेंस कि कंपनीज चेंज देयर अकाउंटिंग पॉलिसीज टू गिव अ रोजी पिक्चर इन द प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन. सो वी हैव टू बी वेरी वेरी केयरफुल व्हाइल सीइंग दिस कि हिस्टोरिकल फाइनेंशियल इंफॉर्मेशन में या इमीडिएट इन जो आपने पुराने सालों में जो प्रोस्पेक्टिव इंफॉर्मेशन दिया था उसमें कोई और पॉलिसी थी और इमीडिएटली इस प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन उन्होंने पॉलिसी चेंज कर दी. सो आवर रडार शुड बी ऑन इफ दैट इज द केस. एंड देन अगर आप एक रेंज दे रहे हैं तो वो पॉइंट 1 साल से 5 साल, 6 साल से 7 साल, वो रेंज के जो एंड पॉइंट्स हैं, यू हैव टू बी वेरी वेरी श्योर, यू हैव टू बी वेरी वेरी डिसाइसिव दैट दीज आर करेक्ट. अगेन वेरी वेरी इंपॉर्टेंट एस्पेक्ट, बहुत पुरानी सी चीज है जो हम बार बार बोलते हैं, डॉक्यूमेंटेशन नॉट डन, ऑडिट नॉट कंक्लूडेड, ऑडिट नॉट डन. सो अगर आपने रिपोर्ट भी वेरीफाई कर दिया, यू हैव वेरी कॉम्पिटेंट टीम, यू डिड ऑल द रिसर्च रिलेटेड टू पीयर्स, बेंचमार्किंग, इंडस्ट्री, you did all interrogation from the management, you reached to the best of the assumption, but आप उसको डॉक्यूमेंट नहीं कर पाए या करना भूल गए या टाइम नहीं था, कुछ भी हो सकता है. So that is not an effective audit. So everything what we do, be it evidence relating to supporting, जो हमने source लिया या assumptions use किए या जो वैलिडिटी ऑफ दोज assumptions कि वो कितने साल वैलिड हो गए. अगर मैनेजमेंट मुझे बोलता है कि ये रेट जो इंटरेस्ट रेट है वो 3 साल के लिए वैलिड है और assumptions में वो 5 साल तक एक्सटेंड हुआ, दैट मीन्स मेरी कैलकुलेशंस विल गो रॉन्ग। मैनेजमेंट का रिटन रिप्रेजेंटेशन हमारे डॉक्यूमेंट्स में होना चाहिए, बिकॉज दो एट सम पीसेस वी डू नॉट हैव एनी प्रेरोगेटिव और से, so those will be covered by management representation. Overall plan for the examination that needs to be there. Nature, timing and extent, these are very simple procedures, were very very important to document. And after concluding my assignment, if I have reasons to believe कि report मेरी modified होनी चाहिए या withdraw मुझे करना है, that conclusion has to be documented very very clearly with the reasons for your action. अब रिपोर्ट पे बात करते हैं, which is very important. So I am left with 8 minutes from now, so I'll quickly wrap it up. So we have to talk about a report on the financial information. So as I started with saying कि मैंने पूरे साल पढ़ाई तो कर ली, बहुत अच्छे से तैयारी करी है, मैंने past 10 years के papers check कर लिए, industry practice देख लिया, but my own report card, which is the report on the company's prospective financial information जो मैंने audit किया, मैंने वो रिपोर्ट ही ठीक से नहीं लिखा, मैंने उसकी वर्डिंग्स ठीक से नहीं लिखी, मैंने उसका मॉडिफिकेशन ठीक से नहीं लिखा, मैंने उसमें रिस्पॉन्सिबिलिटी ईओएम जो आना था वो ठीक से नहीं लिखा, दैट मीन्स आई विल फेल माई एग्जाम एंड देयरफॉर इट इज बिकमिंग वेरी वेरी इंपॉर्टेंट. सो ऑडिट रिपोर्ट में जस्ट लाइक एनी रिपोर्ट हैज अ वेरी स्पेसिफिक पैटर्न ड्रिवन बाय ऑल ऑडिटिंग स्टैंडर्ड. यू शुड हैव टाइटल, एड्रेसी, आप क्या प्रोस्पेक्टिव इंफॉर्मेशन दे रहे हो आपको वो बताना है, कौन से एप्लीकेबल स्टैंडर्ड्स में आपने ऑडिट किया, मैनेजमेंट ने रिस्पॉन्सिबिलिटी लिया, किस यूजर ग्रुप के लिए आप वो रिपोर्ट बना रहे हो और आपने उसको टेस्ट चेक बेसिस पे किया, बिकॉज यू कैन नॉट टेक 100% रिलायंस और यू कैन नॉट टेक 100% ओनर्स. देन as we mentioned, that's a moderate negative assurance. We cannot give positive assurance, and that is the difference between Indian standard and the इंटरनेशनल स्टैंडर्ड ऑल्सो. वो assumption हमें देना है और ओपिनियन पैराग्राफ क्लियरली स्टेटेड होना चाहिए, डेट आना चाहिए और प्लेस एंड सिग्नेचर आना चाहिए. सो दीज आर वेरी डिफाइंड डेफिनेटिव स्टेप्स और द पैराग्राफ्स ऑफ द ऑडिटर्स रिपोर्ट. आफ्टर इंट्रोडक्शन ऑफ ऐसे 700 का सीरीज हमारा फ्लो थोड़ा चेंज हो गया, लेकिन यहाँ पे ये फ्लो हम ऐसे ही रखेंगे. एज आई मेंशन्ड, एवरी स्टैंडर्ड एज अ डिफरेंट पैरामीटर फॉर रिपोर्टिंग, सो प्लीज फॉलो दैट. आप उस पर ऐसे 700 का फ्लो या ऐसे 700 के का पैटर्न आप अप्लाई नहीं कर सकते हैं. सो अगर आपको लगता है कि आपके पास रीजंस है एडवर्स ओपिनियन देने के, क्वालिफिकेशंस देने के लिए, जस्ट लाइक एनी अदर इंफॉर्मेशन यू हैव और एनी अदर एंगेजमेंट यू हैव, आप डिस्क्लेमर भी दे सकते हैं इफ यू आर नॉट गिवन फुल एक्सेस टू द रिक्वायर्ड इंफॉर्मेशन. सो जैसा जो राइट्स एंड ऑब्लिगेशंस आपके बाकी स्टैंडर्ड से आपको मिलते हैं बाकी ऑडिट एंगेजमेंट्स में, वो आपके पास यहाँ पे भी है. अगर मैं बात करूं ये स्टैंडर्ड और इंटरनेशनल स्टैंडर्ड, बिकॉज अगर हमें एक स्टैंडर्ड पता है और दूसरे स्टैंडर्ड का हम सिर्फ डेल्टा समझ लेते हैं, then I'm good to go to understand the international standard. So there are a very few differences between the two. So first of all, as I just mentioned, AE 3400 does not, allows to have sufficient audit evidence. Here positive assurance आप नहीं ले सकते हो. I just paraphrase my explanation. ISAE gives you the liberty to use positive assurance if you have relevant backup sources, assumptions, but इंडिया में वो अलाउड ही नहीं है. जो ओरिजिनल कंटेंट आता है वो ISAE 3400 से आता है, उसमें कुछ मॉडिफिकेशंस किए हैं to make it even better and usable in India. जो एविडेंस की रिक्वायरमेंट है कि आपको ये एविडेंस लेना है, आपको वो एविडेंस लेना है, ISAE में भी है, लेकिन उस पर ज्यादा फोकस और एम्फेसाइज किया है SAE 3400 में. जो टर्मिनोलॉजी हमारी इंडिया में यूज होती है, प्रोफेशनल प्रोनाउंसमेंट्स, वो वहां पे प्रोफेशनल स्टैंडर्ड्स लिखा है, दैट इज जस्ट अ पैरिटी विद अदर स्टैंडर्ड्स. स्कोप सेक्शन ISAE में नहीं है, जो कि इंडिया में बहुत अच्छे से यूज होता है, इसलिए वहां पे देना जरूरी है. दैट इज द डेल्टा बिटवीन द टू. Documentation requirement, though it's not debarred, not specifically mentioned, but here it is very much focused that documentation around these assumptions is a must. So these are the very few differences between the two standards. नाउ अगर हम क्विकली इलस्ट्रेटिव फॉर्मेट देखें तो स्टैंडर्ड हमें दो बेसिस पे आपको फॉर्मेट्स देता है। एक प्रोजेक्शन के लिए जो कि हमारा बहुत ही बेसिक सा हमारा फॉर्मेट है। सो प्रोजेक्शंस के केसेस में वी give a format which is given here. So as I mentioned, projections and hypothetical information. The delta is projection is based on some set pattern and current situation of the management action and the events in future. So उस हिसाब से ये लैंग्वेज यहाँ पे स्टैंडर्ड ने दिया है। यहाँ पे जो एजम्पशन है ये आप देखेंगे तो यहाँ पे उन्होंने एक्सक्लूड किया है हाइपोथेटिकल एजम्पशंस को। लेकिन अगर मैं नेक्स्ट वाला देखती हूँ, नेक्स्ट पेज पे, दिस एग्जाम्पल इज फॉर माई प्रोजेक्शन। सो प्रोजेक्शन एज आई मेंशन इज मोर हाइपोथेटिकल, इज मोर स्पेक्यूलेटिव, बिकॉज इसमें बहुत सारी चीजें हैं जो लाइकलीहुड उनकी कम हो जाती है एज अगेंस्ट द प्रीवियस केस ऑफ जो अभी हमने पढ़ा। तो दोनों की वर्डिंग्स में थोड़ा फर्क है, दोनों के प्रोसीजर्स में फर्क है, दोनों के डॉक्यूमेंटेशन में फर्क होगा। फिर जो स्टैंडर्ड हमें देता है वो डिफरेंट डिफरेंट एग्जाम्पल्स हमें और भी देता है, जैसे कि आई जस्ट टेक यू थ्रू। सो वहां पे मॉडिफाइड एग्जाम्पल, मतलब जो हमारे पास जो इलस्ट्रेशंस है वो मॉडिफिकेशंस के भी है और क्वालिफाइड ओपिनियन के भी हैं, जस्ट लाइक दैट। सो ये हमारे पास 3-4 केसेस हैं जो कि एक इलस्ट्रेशन के उन्होंने फॉर्मेट दिया, जस्ट रिटिन द समरी ऑफ इट कि क्या है वो वहां पे। ये वाला जो एग्जाम्पल है ये क्वालिफाइड के लिए है, और यहाँ पे उन्होंने एक सिग्निफिकेंट अजम्पशन के ऊपर कोई क्वालिफिकेशन दिया है। और तीसरा जो केस हमें यहाँ पे दिया हुआ है, व्हेन एग्जामिनेशन इज अफेक्टेड बाय कंडीशन दैट प्रिक्लूड एप्लीकेशन ऑफ वन और मोर प्रोसीजर्स कंसिडर्ड नेसेसरी, मतलब जहाँ पे डिस्क्लेमर वाला केस बनता है। सो पहले वाला नॉर्मल मेरा क्वालिफिकेशन है, बट किस केस में है, जहाँ पे इंफॉर्मेशन एप्रोप्रिएट या एडिक्वेट नहीं है। दूसरा पार्शियल मेरा क्वालिफिकेशन है, जहाँ पे वन और मोर सिग्निफिकेंट अजम्पशन डू नॉट प्रोवाइड रीजनेबल बेसिस। और तीसरा केस जो उन्होंने दिया है वो दिया है जहाँ पे आपके पास आप यू आर रेस्ट्रिक्टेड टू परफॉर्म समथिंग, और आप या तो डिस्क्लेमर देना चाहते हो या विड्रॉ करना चाहते हो। सो दैट्स इट फ्रॉम माय साइड. If I talk about and I just summarize in 1 minute, so I've got 1 minute with me available. So as I mentioned, the auditing standards are very very important. So अगर आप ये standard को read करोगे, so this is some कितने पेज का था ये, 32 पेजेस आई गेस। सो आप जब स्टैंडर्ड को पढ़ना चाहोगे, सो आप रीड करते जाओगे, इट रीड्स लाइक वेरी नॉर्मल, डॉक्यूमेंटेशन की बात कर रहा है, assumptions की बात कर रहा है, बट व्हेन यू स्टार्ट अप्लाइंग इट, इट बिकम्स very very important that you pick up the key important cream out of it. So we have to understand the difference between two key terms which we discussed, which relates to the present condition and which relates to future condition. आप किस पर्पस के लिए वो प्रोस्पेक्टिव फाइनेंशियल इंफॉर्मेशन बना रहे हो, किसको दे रहे हो, कितने पीरियड के लिए दे रहे हो, उसमें क्या एजम्पशंस है, क्या वो एजम्पशंस हिस्टोरिकल फाइनेंशियल इंफॉर्मेशन से मैच कर रही है, नहीं कर रही है, वो एकदम डिफरेंट तो नहीं है, कंपनी ने अचानक से कोई पॉलिसी तो नहीं चेंज कर दी है उस assumption को चेंज करने के लिए, ताकि ही कैन रीच टू द डिजायर्ड लेवल ऑफ number which he wanted. So we cannot perform this assignment in silo, ignoring the historical financial information. So वो historical financial information मैं भी audit कर सकती हूँ, मतलब मैंने किया होगा, हो सकता है हम ही उसके auditor हो, ये भी हो सकता है that is been done by another auditor. So आपको ऐसा नहीं कि दूसरा auditor ने किया तो you will just disregard. आपको management के बारे में समझना है, company के बारे में समझना है, और जितना management का या बिजनेस का स्टेबिलिटी होगा, आपका प्रोस्पेक्टिव इंफॉर्मेशन बनाने का जो बेस होगा, जो assumption होगा, वो उतना ही आसान होगा. Yeah, so I'm done. I think I am well within time. Thank you so much. If anybody has a quick question for a minute or so, we can take up, or else at the end of the session.
Thank you so much, ma'am. Your session was very informative and very useful. And the way you explained everything in such a simple manner, like to a layman, forecast and projection may seem very similar, but how you explain that forecast is based on management's correct expectations and projection is a little more speculative in nature and it's based on assumptions. Also, like when you talked about period covered, how like something which has a shorter operating cycle and you can't really rely on a long term assumption for those things. And after every slide, the way you were giving a summary, it was really useful for us to retain it. So I just had a few questions. So one question would be that since you said that management is responsible for preparing the prospective financial information, how does an auditor address the risk of management bias in that situation? And what is the level of assurance that an auditor can provide in such engagements?
Yeah. So as I mentioned in during my session also, so first of all, we have to understand the intent of the preparation of those information. So if the company is going for any funding from a banker or a lender or from anybody, and they have been given some mandate that you have to give me this much of capital or this much of sales projections, so management might want to achieve to that target or that expectation from the lender, and in the process of that he might use some assumptions which are very very unrealistic, or as I mentioned, so changing the accounting policy may be one of the means to achieve that target or to give the rosy picture to the investors. Therefore the liability and the responsibility on auditors comes and it's even more as against the historical financial information which comes directly from my books of accounts or from my electronic records. Here everything is based on assumptions, so the basis of the assumption has to be making sense to me, and therefore my the responsibility is more on me as an auditor as against the auditor of a historical financial information.
Okay, and one more question, which is amongst the similar lines, is that because this we are auditing prospective financial information, and the future is very uncertain. So, how do we deal with that inherent, risk that the future is quite uncertain, and whatever we have reported on might not align with what actually happens in the future? So, how can an auditor cover themselves up in this such situation?
Yeah. So as I mentioned, while I am assuring or helping the management, so it might also happen that I am helping the management to prepare the information which relates to future. So this has to be a very good conglomerate of the past pattern of the company's own business and the future projections based on the current industry practice. So it is easier. I'm not saying it's easy, but it's easier for a company which is in existence for at least 5 years or 6 years time to see the pattern of the growth, together with the industry, how they are doing, as against a startup company or expansion of a business of a company where I do not know how that startup company will progress in future or how the additional business what is being currently extended by the company will go. So in case of a company which is existing, obviously as I mentioned, it has to be seen from the eyes of how the historical financial information being presented in past, what has been the growth rate of the company, what has been the EPS or other dividend payout, what is being now being claimed, and what other companies are doing, right? So it has to be very very good mix of past plus future, and again we are not debarred, as I mentioned, for rejecting any assumption which we can't buy, right?
Yeah. Thank you so much, ma'am. Over to Bhavuk. He would introduce our second speaker for the day. Thank you so much.
Thanks.
Thank you, Sarika ma'am, for the wonderful session. I believe it will be very helpful for our audience that the knowledge and thoughts you have shared based on your experience. So now over to Harshvardhan sir for the second part of the session on compilation engagements. Over to you, Harshvardhan sir.
Thank you. Thank you, Bhavik, for the lovely introduction. I would also like to thank AASB for giving me the opportunity to present my thoughts on this particular topic. I will just share my screen just 1 second. My screen is visible?
Yes, sir.
Great. So I would also like to thank AASB for this wonderful opportunity to give my thoughts on compilation engagements. And of course, the previous speaker, Ms. Sarika, the way she has presented on prospective statement, it is very wonderful to see. And also, it was a wonderful explanation. So I will just pick up from that and come to compilation engagements. Uh, See, generally we see more often a lot of seminars are undertaken on standards on audit, and then there are other standards that such as standards on assurance engagements and standards on related services, which sometimes gets missed out. But these are also avenues for sorry for the small and medium size practitioners who can undertake these kind of assignments and these kind of engagement. And of course, before we undertake any such kind of engagements or assignments, we need to be aware of what the standard actually requires from us whenever we perform such engagement. So, without further ado, let us just start with today's topic, which is SRS 4410 compilation engagements. That is a standard on related services on compilation engagements. Now, we are all aware that the structure of standards which has been issued by ICAI, which is nothing but first, there is a framework for quality control in all kinds of engagements. After that, there is a framework for assurance services, and then there is a framework for related services. Today, what we will be covering is the framework on related services, that is engagements of related services such as agreed upon procedures, compilation engagement, and other related services. But what we will be covering today is specifically compilation engagements. Now, often a question is raised or question is asked that even when we are performing assurance and other assurance engagements other than statutory audit, or even when we are performing related services, do we still have to comply with SQC1? The answer is always yes. The firm has to comply with standard on quality control, that is quality control for firms that perform audits and reviews of historical financial information, other assurance and related service engagements. So if we see it in the name itself, it is mentioned that it also is applicable to related service engagements, and therefore we will also have to comply with SQC1 on quality control. So, irrespective, even if you are a CA firm who's providing only services on related services such as compilation engagements, or who is only providing other assurance engagement services other than statutory audit, you will still have to comply with SQC1. Now, let us understand basically in audit, whenever we give our assurance in audit, there are different levels of assurance for different types of services. So when we are performing an audit, if we look at it, the level of assurance that we as CAs provide is a high level of assurance, and it is often a positive assurance on whatever assertion. Basically, in our audit report, we generally mention, in our opinion, the financial statements present a true and fair view, something like that. Similarly, whenever we give review and assurance, other assurance engagements, sometimes we give moderate assurance. At that point of time, we give a negative assurance, or we may also give positive assurance in certain cases. Whereas when we come to related services and coming to our topic of compilation engagement, one key thing that needs to be noted in this is that in compilation engagements, we do not provide any type of assurance to the users. So this is something that is very different from our auditing and our review and assurance service. In related services, we do not provide any kind of assurance on whatever work that we have been doing. It is our responsibility for compilation of information and presentation of that information, but we will not provide any assurance on the services that we are giving. In the report provided, there would be identification of the information that has been compiled. We have not attempted to verify. So it will be specifically excluded from our responsibility that we will not be verifying the documents, etc., that we have compiled, but it will be our responsibility to compile the financial statements. So continuing with that, let us understand engagement quality control review. there was a certain QRB observation, not establishing policies and procedures setting out criteria against which all other audits and reviews of historical financial information and other assurance and related services engagement should be evaluated to determine whether engagement quality control review should be performed. So this was one of the QRB observation where they said that the firm had not established policies and procedures setting out criteria. Now, let us understand where they are coming from. They are coming from para 60 of Form SQC. So, when we read para 60, we understand that the firm should establish policies and procedures requiring for appropriate engagements an engagement quality control review that provides an objective evaluation of the significant judgments made by the engagement team and the conclusions reached in formulating the report, including it requires to set out criteria against which all other audits and reviews of historical financial information, just one second, yeah, and other assurance and related service engagements should be evaluated to determine whether an engagement quality control review should be performed. So just like that, it is very clear that SQC1 is going to be applicable even to standard on related services 4410, which is nothing but our compilation engagement. However, it is to be noted and remembered that we will not be providing any type of assurance on compilation engagements. Coming to specifically today's topic, that is 4410 compilation engagement. The effective date of this revised standard is 31st March 2016. It deals with the practitioner's responsibility when engaged to assist the management with the preparation and presentation of historical financial information. Now, it is very important if we look at it, the word that is used out here is practitioner responsibility. Your practitioner will not be synonymous with auditor because like Ms. Sarika ma'am already explained us, when we as practitioners, it is possible that we as practitioners may provide information on prospective financial information as well as be the independent auditor. But in the case of compilation engagement, if we are doing or if we are performing compilation engagement, we will generally never be the statutory auditors of that entity. Therefore, the word that will be used out here will only be practitioner. It will not be independent auditor. So we understand that the scope is that the standard deals with the practitioner's responsibilities when engaged to assist the management with the preparation and presentation of historical financial information without obtaining any assurance on that information and to report on the engagement in accordance with this standard on related service. Our scope also is that it applies to compilation engagements for historical financial information. So one part is that it is applicable to historical financial information, and other part is that it may be applied or adapted to compilation engagements for financial information other than historical financial information, such as prospective financial information. So here, as practitioners, if we are helping the management to prepare prospective financial information along with SA 3402, we have to look at also the requirements which come from SRS 4410 regarding the compilation engagements. Also, it is applicable to compilation engagements for non-financial information such as greenhouse gas statements, CSR reporting, environmental reporting, and so on and so forth. The scope, if we look at the financial information that is the subject of a compilation engagement may be required for various purposes. So when we look at the purposes for which our financial information may be required, for which the practitioner will provide the service of compilation. So that may be required to comply with mandatory periodic financial reporting requirements established in law or regulation, if any. So for very simple, for instance, the management of a company may undertake our services for compilation engagement, for compiling their financial statements, which is required as per Companies Act annually, or which is required as per SEBI regulations every quarterly. So that is something that that comes in the first part, which is a mandatory periodical reporting. Second part is for purposes unrelated to mandatory financial reporting under relevant law or regulation, including for management of those charged with governance, prepared on a basis appropriate for their particular purpose. Now, their particular purpose could be their internal use. If management wants to make certain estimate, or if they want to know certain financial information, then they can ask us for their particular internal use. One basic example could be that, let's say, for instance, the parent entity of this Indian entity is outside India, and the management requires the practitioner to prepare the financial information for the management so that the management can use it for its consolidation purpose of it with its parent entity. Now, for that reason, if we have to prepare financial statements, it will form part of this compilation engagement as part of other than mandatory reporting of law and regulation. Just 1 second. I'm just going on to just 1 minute. Yes, I'm so sorry. Moving on. The second point, other than mandatory financial reporting requirement, we may require the management may require compilation engagement for periodic financial reporting undertaken for external parties under a contract or other form of agreement, such as financial information provided to a funding body or to support provision or continuation of grants. So the entity can require the financial statement to be provided to a particular funding body for the purpose of receiving a grant and for the purpose of continuous receipt of grant. Also, it may be for transactional purpose, such as to support a transaction involving changes in the entity's ownership or financing structure, such as for mergers and acquisition. For that purpose, the management may require compilation engagements. Now, in a compilation engagement, the practitioner applies his or her accounting and financial reporting expertise to assist the management in preparation and presentation of financial information of the entity in accordance with the applicable financial reporting framework. And also, he reports as required by this SRS. So, another misconception is that just because we are not providing any assurance in an SRS, that does not mean that we will not be providing a report under this SRS. This SRS also requires us as practitioners to provide a report. So we will be providing a report, but we will not be providing any assurance on the engagement. The basic premise or the basis on which we will undertake compilation engagement. First and foremost, we have to note that it is not an assurance engagement. There is no requirement to verify accuracy and completeness of information provided by the management. This comes generally comes as a very big shocker to everyone, because how can a CM not be responsible for verifying accuracy? But that is why we are giving no assurance, right? Because we are not responsible for providing any for verifying any accuracy or for verifying any completeness. For that reason, we do not provide any assurance on these engagements. Further, there is no requirement to gather evidence to express audit opinion or to give a review conclusion. So there's no requirement even to gather audit evidence. A lot of CAs will be getting very happy. Oh, there is no requirement to gather audit evidence, so there is no requirement to do a lot of documentation. No lot of documentation also, not a lot of accuracy or completeness verification also. So that is something that is different than our standard, whatever normal audits that we do or any other assurance engagements that we provide. Further, management retains the responsibility for the financial information and the basis on which the financial information is prepared and presented. So, under 4410, when a practitioner is preparing financial statement or compiling the financial statements, that does not shift the responsibility from the management to the practitioner. This has to be very clearly understood that ultimately the management is responsible for preparation of financial statements. Ultimately, the management is responsible for maintaining the financial information. Ultimately, the management is responsible for preparing the financial statements and presenting the financial statements in accordance with the applicable financial reporting framework. It is not that just because the practitioner has assisted the management in performing compilation engagement or in preparing the financial statement, automatically the responsibility has shifted to the practitioner. No, the responsibility will be retained by the management itself. Also, this SRS does not impose any responsibility on management of those chartered governance or it does not override law and regulation with regards to responsibility of management with those chartered management or those chartered governance. So this SRS does not override any law or regulation with regards to management's responsibility. So if in Companies Act it is mentioned that management is responsible or those charged with governance are responsible for preparation and presentation of financial statement, SRS 4410 will not shift that responsibility. SRS is just a standard that we as practitioners have to comply with when we are performing such kind of engagements. Compilation engagements done in according to SRS 4410 is based on the premise that management or those charged with governance have agreed to certain responsibilities which are fundamental to the performance of the engagement. So just like a normal audit, this point is very similar. Certain fundamental responsibilities have to be agreed by the management and those charged with governance before we actually perform the engagement. So just like a standard on audit, how we will obtain an engagement letter, here also we should obtain an engagement letter. We will see that in detail in the further slides. Value of compilation engagement. Compilation performed in accordance with SRS 4410. Application of expertise in accounting and financial reporting. So here is where we as practitioners will apply our expertise in accounting and financial reporting for compiling whatever information that the management wants us to compile. Also, we will ensure that there would be compliance with standards, including ethical standards. So ethical standards still have to be complied with, and there should be clear communication of nature and extent of practitioners' involvement. So just to pause out here and reflect back on whatever we have seen until now. Compilation engagement is an engagement wherein we as practitioners are not going to provide any assurance, but we will still be providing our report on the financial information that is compiled. The financial information that is compiled is not necessarily only for the purpose of statutory audit or only for the purpose of limited review. The financial information that will be compiled may be even for other purposes, maybe for company's internal use, maybe for management's internal use, etc. Further, it may also happen that you may use this particular standard on related services for compilation engagements with regards to prospective financial information. So it is not just limited to historical financial information. That is something that we need to keep in mind. Okay. Moving forward on this. Applying SRS 4410, what are the conditions? The practitioner is engaged to compile historical financial information and provide a report for engagement in accordance with SRS 4410. So it is our responsibility to provide a report on it. However, in that report, we will mention that we do not give any assurance on this compilation engagement. Compliance with SQC1. It applies to the firm with respect to its compilation engagement. The provisions of this SRS regarding quality control are premised on the basis that the firm is subject to SQC1. So basically, this the compilation the SRS 4410 on compilation engagement. The provision of this SRS is based on the fact that the firm which is performing the particular engagement is subject to SQC1. So any firm, any CA firm, if it is a CA firm, it is subject to SQC1, where the firm has to comply with SQC1 and then SRS is applicable. Let's say, for example, there is a private limited company and private limited company is providing consultancy services, and that consultancies, and as part of those consultancy services, the private limited company is preparing financial statement. That does not mean that SRS or SQC1 is applicable to that private limited company. The provisions of these SRS regarding quality control are premised on the basis that the firm is subject to SQC1. So as far as the firm is subject to SQC1, it is a CA firm. The firm has to comply with the standards on quality control, then the SRS becomes applicable. But deficiency in firm's quality control does not necessarily mean that the engagement was not carried out in accordance with professional standards and legal and regulatory requirements, or practitioner's report was not appropriate. Now, these are the requirements which come under the SRS 4410. The requirements say that first, you will conduct of a compilation engagement in accordance with this SRS. There would be certain ethical requirements which have to be complied with. Then there are certain levels of professional judgment which are required. Apart from after that, there will be some engagement level quality control at specific engagement levels. Then there would be engagement acceptance and continuous relationship. Further, there will be communication with management and those charged with governance. Then there will be actual performing of the engagement. Lastly, what documentation has to be done. As practitioners, we will never be out of this documentation elephant that is there. So even in SRS 10, even though you are not giving any assurance on the engagement, there will be some level of documentation which will be required. And lastly, we will see how, as practitioners, we will be reporting on this. Just one second. Okay. Conduct of compilation engagement in accordance with this SRS. The practitioner is to have an understanding of the entire text of this SRS, to understand its objectives and to apply its requirements properly. Practitioner to comply with each requirement of this SRS unless a particular requirement is not relevant to the compilation engagement. Example, if circumstances addressed by the requirement do not exist in the engagement. I shall not represent compliance with this SRS unless complied with all the requirements of this SRS relevant to the compilation engagement. So we should we should represent that we have complied with this standard on related services only if we have complied with all the requirements of standards on related services. If we have not complied with all the requirements, we should not say that we have followed SRS 4410. Ethical requirements, all the ethical requirements are applicable. However, one major ethical requirement which is otherwise applicable for our audits and limited reviews, etc., is independence. Independence is not a precondition for compilation engagement. So for compilation engagement, you need not be you need not be independent of the entity. Even though there may be some level of non-independence there, you can undertake this particular service and provide compilation engagement service to the entity. Professional judgment, we saw that there is a need and to exercise professional judgment. If we look at the exercise, the practitioner is to exercise professional judgment based on facts and circumstances of each case known to the practitioner up to the date of report. Also, based on exercise professional judgment based on knowledge from other engagements undertaken for the client. There might be some other engagements that we may be undertaking for the same particular client. Any knowledge that is there in that we have obtained from other engagements that we have undertaken for the client, you can use that for exercising professional judgment. Also, exercise professional judgment in understanding of client's business and operations of the client, and the extent of management judgment required in preparation and presentation of financial information. Next point was engagement level quality control. The engagement partner shall take responsibility for the overall quality of each compilation engagement to which the partner is assigned. So, just like basic of SA 220, that at each engagement level, there should be quality control. Even here in SRS 44, then at each engagement level, there should be a quality control, and ultimate responsibility belongs to the partner. The engagement being performed in accordance with the firm's quality control policies and procedures. By following appropriate procedures for client acceptance and continuance, we will see what are those procedures. Engagement team's competence and capabilities. Whenever we take up an assignment, we should be sure that engagement team is capable and competent enough to perform the specific engagement. Also, by being alert for indications of non-compliance by members of the engagement team with relevant ethical requirements. Of course, as part of relevant ethical requirements, independence is not one of the requirements. And directing, supervising, and performing the engagement in compliance with professional standard and applicable legal and regulatory requirements. Also, for taking responsibility for engagement documentation. Ultimate responsibility belongs to the engagement partner for engagement documentation, and he will be responsible for directing and supervising the engagement, that his team has been performing the engagement properly. His team has been following the applicable legal requirements, regulatory requirements, so on and so forth. Engagement acceptance or continuance. The practitioner shall not accept or do not agree unless agreement with management on following terms. Before we start the engagement only, prior to performing the engagement, we need to agree on what is the intended use of the compilation engagement. Is the compilation engagement for statutory audit purposes? for any legal or regulatory requirements, or is it for some internal purpose? Whatever is the purpose, we need to agree in advance. Second, we need to agree on whether there would be any restriction on use and distribution, or there would not be any restriction on use or distribution. So that is also something that has to be agreed prior. Third, identification of FRF. It is very important to agree on what financial reporting framework you will be following while you are compiling. See, because tomorrow you start compilation and you start compiling as per IGAP, for instance. Then we realize that, oh, no, you don't have to compile as per IGAP. It has to be compiled and the financial statement has to be presented as per Ind AS. So if that is the case, you need to identify what is the financial reporting framework applicable, if it is there as per any law or regulation, and you have to ensure that you prepare the financial statements or you compile the financial statement based on that financial reporting framework identified. Next, agree on the objectives and scope of the engagement. What are the objectives? What will be the scope? Agree on practitioner's responsibility with regards to ethical requirement. Agree on management's responsibility. Even though you as a practitioner will be performing compilation engagement, the ultimate responsibility of preparing financial statement is not shifted from management to the practitioner. And just imagine if that happens, then all the companies, all the entities will outsource their financial statement preparation to independent CAs, or not even independent CAs, dependent CAs. And in that case, the responsibility for financial statements will also be shifted to CAs. So responsibility for preparation of financial statement, one CA, auditing the same financial statement, another CA. There would be full chaos. So the responsibility of management is never shifted for preparation of financial statement. It remains with the management itself. Also, we should agree on expected form and content of the report. What will be the expected form of the report? What will be the expected content of the report that we will be providing? Okay. Record the agreed terms in an engagement letter or other suitable form of written agreement prior to performing the engagement. This is a basic requirement, just like how as per our SA 210, we have to agree the terms of audit engagement. Here also, you can have a separate engagement letter to agree what will be the practitioner's responsibility, management's responsibility, so on and so forth, and document it in an engagement letter, countersigned with the management. Communication with management and those charged with governance should be done on timely basis for any and all significant matters, and what is the nature of matters, and what is the expected action to be taken by management or those charged with governance. So let's say, for example, as part of your compilation engagement, you identify that there is a particular misstatement. Then that misstatement has to be communicated to the management. There needs to be document that yes, you have communicated the misstatement to the management, and all the matters, including the nature of the matter, etc. On a timely basis, all matters concerning the engagement, which in the practitioner's professional judgment are of sufficient importance to merit attention of management, those shared with governance as appropriate, have to be communicated to the management. Performing the engagement. When we talk about performing the engagement, it is divided into two parts. First, what is our practitioner's understanding? How we will understand the engagement and the assignment. And second, actually compiling the financial information. So when we talk about practitioner's understanding, we as practitioners need to obtain sufficient understanding of the business and operations of the entity, of the accounting system, of the accounting records, and of the applicable financial reporting framework. This is our understanding that we have to take before we actually start the particular assignment. If we see, you can sort of say that this is like standards on audit, SA 315, where we identify and assess risk of material misstatement through understanding the entity, but at a little narrow level compared to the expanded responsibility that we have in standards on audit. So here, still you have to obtain sufficient understanding about the business operations, about the accounting system, about the financial reporting framework, so on. Also, establish a frame of reference to exercise professional judgment. Depth and breadth lesser than that of management. Of course, why? Because ultimate responsibility is still with the management. However, a level that is sufficient to enable compilation under terms of engagement, that understanding we need to obtain. And understanding the entity or understanding the accounting system is an ongoing process. It will keep on going on from year after year. Even during the engagement, it will keep on going on. So that is something that you need to keep in mind. Compiling the financial information. This is nothing but the entire process of what we will do, how we will do. So let us understand that. First, compile using records, documents, information, etc., which is provided by the management. Again, just to remind you, we are not giving any assurance on this. This is a no assurance engagement. Discuss with the management or those charged with governance what are the significant judgments for which assistance is provided. Any significant judgments which is required from the management, you can take those significant judgments from the management. For instance, when we are compiling financial statements or financial information, we as practitioners may not be able to best judge how much should be our provision for doubtful debts. That is something that has to be given to us, which is a management estimate by the management. So you can take those estimates from the management, take those judgments from the management, which will be used to prepare the financial statements. Before completion, read the compiled financial information vis-a-vis understanding about the entity. So what final output that we have seen before we complete it, whatever final output that we have before we release it, read that and compare it with what we understood about the entity, and is there a major variation. Any incomplete, inaccurate, or unsatisfactory records are there, then or information is provided by the management. In that case, you bring those to the attention of the management and request additional or corrected information. If you are unable to complete the engagement because the management fails to provide the requested information or records, you can either withdraw from the engagement and inform the reasons to those charged with governance. Or you propose appropriate amendments if you become aware that applicable financial reporting framework is not adequately referred or described in the financial statements. Then you can propose amendments to the management that, look, this is the amendment you need to make, these are the changes that you need to make. Compiled financial information requires amendments to prevent being materially misstated. Compiled financial information may otherwise become misleading. So always, before you finally give your before you finally release the compiled financial information, check that the compiled financial information is presented and is as per the applicable laws and applicable financial reporting framework. If it is not as per applicable financial reporting framework, then there might be a material misstatement. If there is a material misstatement, eventually when the auditor comes, the auditor will qualify his opinion on the financial statement. Then it will not serve the purpose. So if we as practitioners are undertaking compilation engagement, even though it is not our explicit responsibility to prepare financial statement, even though it remains with the management, it should be your duty, it should be our duty to inform the management that what you are doing, what assumption you are taking, what accounting policy you are following is correct or incorrect. If it is incorrect, you need to inform the management that, look, you need to correct it so that it can be presented properly to the auditors. If the management declines or does not permit amendment, withdraw and inform the management and those charged with governance, giving reasons why we are withdrawing. If withdrawal is not permitted because of some law or regulation, or if withdrawal is not happening, then you determine what are professional and legal responsibilities. Obtain acknowledgement of management of those charged with governance that they have taken the responsibility for the final version of compiled financial information. Ultimately, they are responsible. We are not taking responsibility. So that acknowledgement you can obtain from management. Documentation, something that will never leave us, whether we do essays, whether we do SAEs, whether we do SRS, SRE, anything that we do, documentation is not going to leave us. There is a need to document a record of matters of continuing relevance to future compilation engagement. If everything goes good, if the management decides, no, we will make the change, we will make the amendments, then you don't need to withdraw. If you don't need to withdraw, if you are not withdrawing next year also, you will be performing this engagement. When you will be performing next year also, so any matter of continuing relevance or significance, you need to document and keep it. Also, fix accountability of engagement team. Who had performed the engagement, who was the maker, who was the checker, prepared by, reviewed by, whoever prepared and reviewed, that needs to be fixed. Also, documentation includes significant matters that arose and how those significant matters were addressed. Just like how in our audit, what were the significant matters, how it was addressed. Even in the SRS, you need to have that. Further, it also includes how the compiled information reconciles with underlying accounting records, information, etc. So that is a documentation or a work paper that you need to maintain, that these were the accounting records, these are the final compiled financial information, this is how it is reconciling. For the final financial information for which management or those charged with governance has acknowledged their responsibility, and ultimately you will need to document also your practitioner's report. So these are the major things that you will need to document as part of this SRS. After documentation, let us understand how will be the reporting in the case of compilation engagement. Sorry. What are the certain elements of practitioner's report? First will be the title, whatever is the title, compilation engagement report. Then the addressee, it will generally be addressed to the management of the company or those charged with governance of the company. A statement that the practitioner has compiled the financial information based on information provided by the management. Very important. We are not taking responsibility for completeness. So if we are not taking responsibility for the completeness of financial information, there should be a statement saying that we have compiled the financial information based on whatever information was provided by the management to us. We have not done any specific verification. A description of the responsibilities of the management or those charged with governance in relation to the compilation engagement and financial information. Further, identification of the applicable financial reporting framework, and if a special purpose financial reporting framework is used, a description or reference to the description of that special purpose financial reporting framework in the financial information. So, in our practitioner's report, we will identify, we have prepared we have compiled the financial information as per which financial reporting framework. If it is a general purpose, if it is a special purpose financial reporting framework, then you need to give a description, or you need to give a reference to the description of what is the general special purpose financial reporting framework. So, for example, you may have you may prepare the financial statements, or you may compile the financial statements in accordance with Australia GAAP. So if you are following Australian standards for the purpose of consolidation, that reference needs to be given in your report, that this is not as per your normal Indian IGAP, this is as per Australia GAAP, or a reference in the compiled financial information that financial information is prepared as per Australia GAAP. Okay. Then identification of the financial information, including title of each element, if it comprises of more than one element, such as balance sheet, profit and loss, statement of changes in equity, cash flow statement, etc. And the period for which it relates, of course. Further, a description of the practitioner's responsibility in compiling. What were our responsibility? Explanation is that since it is not an assurance engagement, the practitioner is not required to verify the accuracy or completeness of the information provided by the management for the compilation. Most important, in our report itself, we need to write down that since it is not an assurance engagement, the practitioner, that is we, are not required to verify the accuracy or completeness, because we are not giving any assurance. We are just compiling the information that has been given to us. That's it. Accordingly, the practitioner does not express an audit opinion or a review conclusion on whether the financial information is prepared in accordance with the AFRF. If the financial information is prepared using a special purpose financial reporting framework, that is not a general purpose but a special purpose financial reporting framework, then describe the purpose for which the financial information is prepared, and if necessary, who are the intended users. So see, generally, when we prepare a general purpose financial statement, it is for all. Generally, when we prepare a special purpose financial statement, it is for specific users. It is intended only for specific users. So you give a description of who it is intended for, or contain a reference to a note in the financial information which discloses this information. So either in the financial statements that you are preparing, in that financial statements, you give a note that this is prepared for so and so for the parent entity, etc. And in your practitioner's report, you just give a reference to that note, that as mentioned in that particular note, it is prepared for holding company. Okay? Either that, or you write it directly in your practitioner's report. Also draw attention of the readers of the report to the fact that financial information is prepared in accordance with special purpose, and the information may not be suitable for other purposes. So this is one line which you may add, that it is prepared for special purpose and information may not be suitable for any other purpose. Okay. After that, that will be very simple. Date of practitioner's report, practitioner's signature, and place of the signature. Note, the practitioner shall date the report on the date of the practitioner has completed the compilation engagement in accordance with this SRS. Fine. After that, there are After this, I just wanted to take everyone through the illustrative engagement letters and the illustrative audit reports. We will go through the illustrative audit reports or the illustrative reports for compilation engagement. I would just like you all to go through the illustration of the management letter, engagement letter. So this is the letter which is given to the management of ABC on the basis of information that you will provide. We will assist you, we being the practitioner, will assist you in preparation and presentation of the following financial statement of so-and-so company, balance sheet and statement of profit and loss. These financial statement will not include any explanatory notes. Now, in this case, there were no explanatory notes. However, there could be a possibility that there may also be other explanatory notes other than a note describing the basis of accounting as set out in the EL. The purpose for which the financial statements will be used is to provide full year financial information showing entities' financial position, as of the financial reporting date, financial performance, and so on. This financial statements will solely be for your use and will not be distributed to other parties. Our responsibility, meaning the practitioner's responsibility, a compilation engagement involves applying expertise in accounting and financial reporting to assist you in preparation and presentation of financial information. Since a compilation engagement is not an assurance engagement, we are not required to verify the accuracy or completeness of the financial information provided to us for the compilation engagement, or otherwise to gather evidence to express an audit opinion or a review conclusion. Accordingly, we do not express an audit opinion or a review conclusion on whether the financial statements are prepared in accordance with basis of accounting you have specified as described above. So like we can see, we do not express a audit opinion, neither do we express a review conclusion on the financial statements that we are presenting. We will perform the compilation engagement in accordance with Standards on Related Services SRS 4410, which is this particular standard. And of course, we will be required to comply with Code of Ethics. And here it just lists down what will be the responsibility of the management in the engagement letter. I will just pause for 1 minute so that everyone can just read what are the responsibilities. Then I will take you through the illustrative practitioner's report. So you can just go through the management responsibility. Just giving 1 minute to the members to just read it. Okay. So these were the management's responsibility in which we can put in the engagement letter. And of course, this will be whatever will be our compilation report. I wanted to show also illustrations as per the standard itself. So when we look at illustration 1, this is a practitioner's report for an engagement to compile financial statements using general purpose financial reporting framework. General purpose financial report statements required under applicable law that specifies that the entity's financial statement are to be prepared applying the accounting principles generally accepted in India. So this is a general purpose financial statement prepared in accordance with whatever accounting principles are accepted in India. So your management and practitioner will need to agree. Sorry. The management and the practitioner will need to agree on what is the financial reporting framework that they are going to use for the preparation of financial statements. This is just an accountant's compilation report to the management of the company. So if we see the statement also, it will be very straightforward and it is a very small report compared to our normal audit reports. We have compiled the accompanying financial statements of ABC company based on the information that you have provided. These financial statements comprise of balance sheet, statement of profit and loss, and cash flow statement, and a summary of significant accounting policies and other explanatory information. We perform the compilation engagement in accordance with this SRS, straightforward. We have applied our expertise in accounting and financial reporting to assist you in the preparation of financial statement in accordance with accounting principles generally accepted in India. We have also complied with relevant ethical requirements. These financial statements and the accuracy and completeness of the information used to compile them are your responsibility, yours being the management's responsibility. Since a compilation engagement is not an assurance engagement, we are not required to verify the accuracy or completeness of the information you provided to us to compile these financial statements. Accordingly, we do not express an audit opinion or a review conclusion on whether these financial statements are prepared in accordance with accounting principles generally accepted in India. So here our responsibility will be to provide with an assurance report, to provide with a compilation report, not an assurance report, but specifically saying that we are not responsible to verify the accuracy or completeness. This was one illustration. Second illustration, it is same, but it is a modified general purpose financial reporting. If we look at the example, the applicable financial reporting framework is accounting principles generally accepted in India, excluding the treatment of current investment, which have been valued at fair value rather than lower of cost or fair value. So if we look at AS13 says we have to value current investments at lower of cost and fair value. However, in this case, we are valuing the investments using fair value. Because of that, the use of distribution is also not, in this case, the use or distribution is not restricted. So even though it is special purpose, the use is not restricted. So how our reporting will change? So from top till here, it remains the same. Only when we say accordingly, we do not express an audit opinion or a review conclusion on whether these financial statements are prepared in accordance with the basis of accounting described in note X. Instead of saying whether the financial statements are prepared in accordance with the accounting standards as applicable in India, we are saying on with the basis of accounting as described in note X to the financial statement. Now, as stated in note X, the financial statements are prepared and presented in accordance with accounting principles generally accepted in India, excluding current investments which have been valued at fair value rather than being valued at carried at cost, lower of cost or fair value. These financial statements are prepared for the purpose described in note Y of the financial statement. Accordingly, these financial statements may not be suitable for any other purposes. So this is the disclosure that we will give in our compilation report. Just one more last illustration. Quickly, I will take us through. For engagement to compile financial statement using basis of accounting specified in a contract. So your financial statements are prepared to comply with provisions of a contract, applying the basis of accounting that is specified there. The practitioner is engaged by a party other than management or those charged with governance. And the financial statements are intended for the use only by the party specified. So here, management has not appointed us to prepare the financial statement. A third party has appointed us to prepare or compile the financial statements. Distribution and use of practitioner's report is restricted to the intended users. So quickly, if I just look at same thing, till here the same thing. Only here, as stated in note X, the financial statements are prepared and presented on the basis described in clause Z of provision of the company's contract with whichever company has appointed us, whatever is the date of the agreement, for the purpose described in note Y. Accordingly, these financial statements are intended for use only by the parties specified in the contract and may not be suitable for any other purpose. Our compilation report is intended solely for the parties specified in the contract, should not be distributed to other parties. So here we put a limitation or restriction on use of our report. As stated in note X, again, this is straightforward. This is fine. One common question we generally get is that if you are not providing any assurance on the compilation engagement, do you still need to generate the ULIN? A member has to comply with SRS 4410 while preparing provisional financial statements or compilation of information and has to obtain UDIN for the same. So this is given in the FAQs, which is released by ICAI on UDIN. So if you're giving any compilation engagement or information report, then you need to generate UDIN for the same. Just a brief, it is not an assurance standard. There is no requirement of independence, even though other ethical requirements are there, such as professional skepticism, professional judgment, etc. But independence is not there. Further, it does not address additional activities that the practitioner may perform to assist the engaged management in other areas in advance of compiling entity's financial statement, which means it does not address the bookkeeping part of it. It addresses the compilation engagement part of it, does not address the bookkeeping part of it. Okay. That is it from my side. If there are any questions, I will be happy to take up. Once again, I would like to thank AASB for this wonderful opportunity. And like we have seen, the regulation is getting stricter and stricter, with MCA also focusing on presentation disclosures, etc. So this is also a field of domain which may be useful for the upcoming chartered accountants and for small and medium-sized practitioners to use their expertise not only for auditing, but use that expertise also in performing compilation engagements. So that is something that we can always look at as practitioners. That's it from my side. Thank you, everyone.
Thank you so much, Shivardhan sir, for the detailed and holistic view on the compilation engagements. I believe it was really helpful for all the audience. And with the rising need of compilation engagements in the country, I think it's really helpful. So I just had a few quick questions for you. So do the practitioner need to report the past compiled financial information? Suppose it is required by a law and it is compiled every year. So is it required to present the last year data as well, or the last year report?
Again, see, it will depend on the terms of engagement. Generally, if a management is approaching you for general purpose financial statement, which is required as per law and regulation, and law and regulation is saying that you need to give comparative figures of previous year, then of course, in your terms of engagement as well, the management will specify that you give us for current year and comparative figures for previous year. That way.
Okay, this is helpful. And another thing, for example, everything given that we are not providing any assurance, and we are not held accountable for the data, but still post the report and post we have made the financial information, and some authority finds from very glaring material misstatement, or very an error or fraud. So does the practitioner will be held responsible or liable for that?
So, if there is gross negligence which is proven, the practitioner will be held guilty. Not only the standard, but if we look at our code of ethics, if we look at the professional misconduct, if a professional accountant in practice is found guilty of professional gross negligence, in that case, yes, there will be penalty. But if there was no gross negligence on our part, see, just because there is a fraud, or just because there is a material misstatement which is identified at a later date, does not mean that we did not perform our duties. It may be so possible that the management did not provide that information to us in the first place. And like we said, we are clearly giving in our report that we are not responsible for accuracy and completeness. But at the same time, what we should do is we should document what information has come from the management. So that is a helpful step that you can take. You just document what has come, including documenting the email that has come from management, that this is the data that they have given. That way. So that may be helpful.
Yeah, it helps. It solves my queries. I think I'm done with my questions. So,
Sir, can I also ask a few questions?
Of course.
Yeah. So one would be that how does the standard exactly address the situation when the accountant basically finds some sort of inconsistency or missing data while he is compiling the financial information?
So in that case, what the accountant can do is he needs to inform the management that there is an inconsistency, and if the management is willing to modify the inconsistency or correct the inconsistency, the accountant will tell the management to correct it, or the accountant will correct it in the financial statement. If the management is still hesitant on that, the accountant can withdraw from the engagement, and if withdrawal is not permissible, in that case he can give the report, but in the report specifically mention that ultimately the responsibility is of the management, whatever compilation that we have done. That way.
One more thing, while I was going through your session, one question that I thought was, what is the ongoing conversation that takes place between the accountant and the management while he's compiling the engagements, apart from the fraud aspect that you had mentioned?
So
What else could be?
ongoing communication would be in terms of many times management is in a better position to inform the practitioner of the assumptions of the judgments that they have undertaken. So that is one thing. Other thing would be to provide the data, or provide the ledger accounts, ledger balances, etc. So those would be the ongoing communications generally that are undertaken. And in my experience, whatever compilation engagements we have done, after we prepare the financial statements and everything, there is a lot of to and fro in terms of presentation and disclosure. So there, in that sense, there could be a lot of communication between management and the practitioner.
Okay, thank you so much. It was a very insightful session.
Thank you.
Any other question, madam?
Yeah, I have some questions to Sarika ma'am.
Please raise question, madam.
Yeah. The question that I have is that in case the projections are not achieved, can the lender prosecute the auditors?
Sorry, I'm on my way for a meeting, so maybe to safeguard the bandwidth, I have not enabled my video.
If you have any question for Sarika ma'am, please raise those questions. Any question for Sarika ma'am, Priyanka ma'am?
Yeah. Ma'am, I was asking that what is the level of acceptability of projections in case of bank for loan purposes? What is the level of acceptability of the projections?
So the acceptability of the projections in terms of the loan which application which has been submitted to banks. So I would not change it, or I would not consider it as different for any other projections also, because the auditor has to apply the same level of judgment, even if that is to be submitted to bank or for internal consumption also. But yes, I think but in case of lenders, it becomes more, because there's a financial liability which is on the company, and any wrong assurance or not exercising the due diligence while giving the assurance report on those projections will or might cause a problem to the auditors as well. However, having said so, because there are a lot of caveats and disclaimer in the standard and in the report also, that projections might not hold true, and that depends on the future outcome and all. Auditors should not generally be held responsible by the bankers or the lenders or any other whoever, provided the auditors had applied all his due diligence at the time of issuing the report, and he has got all the supporting documents and evidences available with him.
Okay, thank you so much, ma'am. One last question. The standard doesn't clearly mention, does the auditor need to be an independent auditor, or can internal auditors also participate in this?
So, see, I would apply a general perception here. Anything which is a subject.
Ma'am, you're not audible.
I hope some connection problem.
Yeah. Do you hear me now?
Yeah, we can.
Yes, madam.
Can you hear me now?
Yes, madam.
Audit strategy here. Any information which is a subject matter of self-review will create a self-review threat for the statutory auditor. If the statutory auditor is required to review its own or own audited prospective financial information, that it might create a self-review threat, otherwise not.
Thank you so much. That was it from my end.
Thank you so much, ma'am, for such a wonderful deliberation. You are having some other engagements and you are going to join another call. So on behalf of AASB of ICI, I extend my heartiest thanks towards you for sparing your valuable time and enlighten all of us on various intricacies relating to the standard. Thank you so much, ma'am.
Thank you, ma'am.
Thank you, ma'am. Thank you, ma'am. Over to Priyamada, ma'am. Any question, one or two questions for Ashwardhan, sir?
No, sir, I've already asked all the questions that I had.
Thank you so much, both the learned speaker Harshvardhan ji and Sarika ma'am, for your precious time, as well as expert opinion, expert advice, as well as the knowledge shared with all our members. I also thank both the moderators CA Bhavuk Babeja ji and CA Priyamata Mukherjee ji for wonderful coordination as well as moderation for this today's webinar. Thank you so much, Priyamata ma'am. Thank you so much, Bhavuk ji.
Thank
And
you,
once
sir.
again, thank you to both the learned speaker, Harshvardhan ji and Sarika ji. And
Thank
I
you
also
for
thanks
this
all the
opportunity.
participants of today's webinar. Thank you so much. Thank you so much. Namaste.
Thank you, Vinay ji.
Thank you,
Thank you,
sir.
everyone.
Thank you. Thank you. Thank you.